Great. In that case, then we will get started. Good morning, everyone. Welcome to our webinar. And today, as the slide there says, we're looking at the local government funding reforms, and then Dan will look at the CTR1 analysis that came out. I think it was early this week, wasn't it, Dan? Or was it end of last week?
Anyways, last Thursday, yeah.
Last Thursday, yeah. So we'll look at that as well and see what that tells us. So, I mean, we all know that the funding reforms are the big item on the agenda. I say that if you're in a two-tier county area, the big item on the agenda this year is probably local government reorganisation. But let's assume that the biggest thing happening this year for local government funding is around the reforms. And they are definitely happening in 2026-27. So that is the big thing that we are obviously really focusing on. We had that consultation paper that came out at the end of last year, just before Christmas, alongside the settlement, setting out the government's objectives and priorities for that set of funding reforms. A lot of that we already know about because it was in the 2018 consultation paper, and the government's been quite consciously saying that it's building on those proposals that were in that consultation paper. So, and in that sense, the main building blocks for the reforms in 26-27 are already in place, and they're things that we know fairly well. So things like the business rates baseline reset, council tax equalisation, and the new social care formulas, the new foundation formula, and then new area cost adjustments as well. So those building blocks we're quite familiar with, we've been modelling for a while, and we kind of know what they look like. So in that sense, the government's trying to consciously say that it's building on those the previous government's proposals, and in that sense trying to indicate that there's cross-party support for these proposals, almost like saying there's nothing to see here, these are just technical updates, and that they're not political in any way, when of course we know to a large degree that they are. So this quote here from the consultation paper talking about agreeing with the previous government, using the best available evidence to assess the differences in the need for local government services. Interestingly, highlighting the concept of deprivation as a key driver in funding reform. That's a phrase that we wouldn't have seen from the previous government, but we know that it's an important factor for this government, and also resources as well. Council tax equalisation, that will be another key priority for this government in these reforms. And then it says, so whilst our proposed objective is in line with the 2018 consultation, we're seeking to retest it, given it was 6 years ago, and there have been significant changes since then. So consciously making that link, but then saying, but we'll do our own thing as well that builds on that and takes it in a different direction. New government, different priorities, and they will take different decisions right the way through these reforms. And to be fair, there is significant scope for justifiable judgment, and use that judgment within a reform system. So it might look similar to what's been envisaged in 2018, but there will be some really important differences, which we'll try and draw out in this presentation. So the next stage in the process is a full consultation paper in late June or even into July. So it's after the spending review, which in itself is in June. We're not envisaging there being any numbers published for the reforms until that consultation paper comes out in June or July. So that's going to be very, very late in the process before we see anything formal in terms of exemplifications or numbers. The spending review will provide the quantum for the settlements for the future, and potentially funding for transitional support, which is almost the same thing, but it'll give us an idea about the scale of funding that's available for the sector. And I think that probably does inform the scale of change and the pace of change that might be applied within the funding reforms. In our view, the process that's been followed loads a huge amount onto that summer consultation, and I think possibly it loads too much onto that summer consultation. It's almost like a one chance to get this right. No advance warning what those numbers look like, and very little time afterwards for what you might call course correction. If some of those proposals don't seem right, or you want to look at something different, there's not a lot of time for that to be done. And then alongside that main consultation, just before the summer, we've got a technical consultation on business rates, on how the baseline reset will work, and we're expecting that. I think it was supposed to be in late March, but that may now spill over into early April. and then a wider consultation on the strategic direction of the rate retention system in the autumn. We're also expecting a consultation on New Homes Bonus at some point. We don't know when. There's the Children's Services Formula. The papers on that were actually published at the end of February, and we'll look at those in a later slide. But unfortunately, we're not able to recreate the modelling or model the formula from those papers. There's just not enough information, and it looks like it's more of a child-based formula that's difficult to model externally at local authority level. And then, of course, the adult social care formula from the University of Kent that was published informally way back in 2019, but there's been no commitment yet from government about whether that will be implemented. And I think generally there's kind of like concern that the process is kind of falling behind, that there's probably insufficient depth in the technical papers to really understand what's going on, or to really challenge and push back, or to really see what the effects are in financial terms. So, you know, a lot's going to be loaded onto that summer consultation, and I think that's a bit of a concern, and that's one of the reasons why we wanted to produce this modelling earlier on, so you can see potentially what those sorts of changes might look like. So the direction of travel is becoming clearer. You know, some very clear statements from ministers. Angela Rayner, Deputy Prime Minister at the Convention of the North, I think that was last month, talking very clearly about the government wanting to put more money back into northern authorities, you know, giving the North what it's owed, what it deserves, stacked against the North, you know, and talking about how they're already starting to put that money back into northern authorities in the 2025-26 settlement, talking about how much more money has gone into the North at that time, and then saying, you know, councils in the North have taken the pressure there being particularly hard, and those authorities bore the brunt of austerity. So very clear about what they want to do. It's also worth having a look at the SOGOMA report that came out last week about fair funding and the kind of things that SOGOMA and SOGOMA authorities are asking for. So things like, obviously, deprivation being the key factor.
Right.
Is someone on them? I'm just going to mute everyone if I can.
Give us copies of the invoices.
Yeah.
There we are. Yeah, I've just seen Nick Morgan's comment from North Yorkshire. Some authorities in the North, metropolitan authorities, North Yorkshire Council won't be one of those authorities. I do apologise for that, Nick. You'll be in a different group, I'm sure. But yeah, I'll rephrase that. It's northern authorities, metropolitan authorities, authorities with higher levels of deprivation, etc., etc. We'll talk about that later on. But SOGOMA also asking for regular resets and regular baseline resets, and also regular council tax equalisation, asking the government to commit to full council tax equalisation, and then limiting the transitional support to 3 years. Clearly, SOGOMA authorities quite rightly expect they're going to be winning from this round of funding reforms and want those gains brought in as quickly as possible. Interestingly, Jim McMahon was actually at the launch of that report, so kind of giving his imprimatur of, you know, this is a report that I can support, and that clearly showing that it's going to influence the way they're going to look at the reforms. Kind of working on what that objective might look like, just sort of testing this out here. You know, is it to reset funding shares to somewhere closer to those in 2010 and 11 before austerity? Is it seeking to put back all those relative changes over that period, or just some of them? We'll look at what our modelling suggests that might look like, and the degree to which they do go back to closing that gap from 2010-11 onwards. But there are some really important constraints on how far ministers can develop this objective and how far they can go. The first is around evidence and data. I think there is a limit to how far ministers can depart from the evidence that's available. You know, and I think that's always the case, but there's always judgment. There are always changes that ministers can make, I think, to get the kind of outcomes that they want. The current process makes it difficult for authorities and other bodies to challenge what's going on, but nevertheless, you know, there's always a chance to do that. Examples of where ministers might make judgments, things like around the indicators and weightings that might be used within the foundation formula, and whether to use or not to use the research on the new children's and adult RNF. They would all be reasonable judgments that ministers could make, and they have really massive impact on the outcomes. Financial sustainability at the authority level, what's the financial impact on those authorities that are losing funding reforms, and are they able to contain that and manage that and be financially sustainable? How is MHCLG going to measure and assess the ability of authorities to lose funding share? What scale of loss, what pace of change? We've been given no indication yet about how they'll measure that, what data sets they're using, what judgments they'll make about that. And then the third, about local government reorganisation. 2 rounds of LGR promised within this Parliament, 27-28, 28-29, so just after the funding reforms come in. At what point do counties who are losing significantly think that LGR actually just compounds their financial pressures? And the answer is, well, LGR will give them the savings they need to be able to balance the budget and deal with those funding losses. I just don't think that's realistic. I think that the impact of LGR is that authorities are quite financially vulnerable for a couple of years at the very least, even if they implement LGR successfully, and compounding that with funding losses, I think is a very dangerous mix. So in practical terms, I think LGR does provide some constraint on what ministers can do. The modelling that we did based on the 2018 consultation paper suggested that a lot of the changes that the previous government was proposing actually would have benefited a lot of the authorities that this government wants to help. So it would have given more funding to the more deprived authorities in the country. And it definitely shifted in that direction. There were clear gains for metropolitan authorities and for those unitary authorities that are similar, and substantial losses for county areas in the southeast as a result, particularly of council tax equalisation, and also in inner London as a result of removing what you might call some urban-based factors, things like density, non-resident population, etc. So, and a lot of the county areas outside the southeast of England were gaining from those 2018 proposals. And that's one of the reasons why those proposals weren't implemented following the 2018 consultation, simply because there were many authorities in the southeast of England who were losing very heavily from them. And I don't think ministers were keen on putting those sorts of changes through, even though counties overall, based on our modelling, would have gained. And you could argue that if the government was simply to revive the 2018 proposals, that would deliver an acceptable outcome. It would replace all the losses that those metropolitan authorities have suffered since 2010-11, but it would give them a higher share of funding. And on that basis, you could say, well, that would have been possibly an acceptable outcome. But I think one of the problems from the 2018 proposals was that Met authorities would have gained significantly from council tax equalisation, but would have had a lower share of needs from a range of different sources. Certainly from what we saw at that time, metropolitan authorities would have had a lower share of the needs assessment. That might have been challenging politically to present that for this government to come out with a set of funding reforms that actually gave more deprived authorities a lower share of the needs assessment. And even though they were only gaining from as a result of council tax equalisation. So there were some good proposals there that I thought that I'm assuming that this government's working on and building on, but they'll want, I think, to take it much further. So we have updated our fair funding model. It will be launched later this week or possibly early next week, version 2.10. And what we've done is we've taken all the proposals that were in the 2010 consultation and then updated them for things that have come out since then, through the funding reform group process or through the consultation paper in December 2024, and also applied what we think are more realistic judgments based on what we think this government might be looking at. So just to run through quickly what we've done, and we'll go through each one of these in more detail, so don't worry too much if I'm going too quickly, but we've updated the control totals, rebased them based on more recent expenditure levels. We've also updated council tax equalisation in terms of using later council tax income. We haven't changed the assumption around it, but we have changed the actual data that we use to calculate council tax equalisation. We've also used new formulas for children's the Children's Services RNF, for adult RNF, and also for public health. We've also created new specific formulas for housing, homelessness, temporary accommodation, and for concessionary fares, and for homeschool travel, all things that this government's thinking about doing and has been discussing in the consultation and in the funding reform group papers since then. And also bringing in new judgment-based weightings for density, non-resident population and deprivation, and bringing those into the new foundation formula. And this chart on the right just shows the impact of those changes on the settlement funding assessment based on the 2025-26 funding distribution. So what would the change be using our latest fair funding model compared to the current distribution of funding? And what you see there is a very big increase in SFA for metropolitan districts, maybe as much as 1.2 billion, a 22% increase in SFA. Significant losses in London, particularly in inner London. So those central London boroughs in particular losing heavily. So even though we're bringing in some higher weightings for things like density and non-resident population, inner London losing quite significantly nevertheless. Outer London's more of a mixed grouping. There are some that are more like shire counties, places like Richmond, for instance. Other places that are more like a Northern Metropolitan Authority, like a Newham, for instance, Barking and Dagenham. So there's quite a mix of different authorities in there, and only losing on average, but there'll be a big range there of different types of outer London borough. Shire counties losing quite significantly as well, losing on our numbers by 457 million, down by 12%. Some quite big reductions there for shire counties now that we've updated to use later amounts of council tax equalisation and using all those other changes as well. Shire districts losing again quite significantly, 28% is quite a big figure for shire districts. And that doesn't even include the impact of a baseline reset. So a baseline reset, which we'll show you in the wider MTFP model, that's the change that shire districts will really lose significantly from. For fire authorities, that's a mixed picture as well, and you'll see a few things going in different directions for fire authorities. We think that fire authorities' share of needs will go up a little bit because we think that the control totals will probably boost that. We'll see on a later slide. But there are some worries, I think, for me, for fire authorities around what happens with council tax equalisation and the assumptions there around the share, the tier split that's applied for council tax equalisation, I think could work quite badly against fire authorities. So that's the broad pattern of what we think might happen based on the latest proposals. Lots of assumptions there, lots of different things that we can assume, different changes that could be made, but nevertheless, that's kind of our default set of assumptions, and that would move a lot of money towards metropolitan authorities, away from inner London and away from shire counties as well. So if we applied those kinds of changes to the overall total resources that authorities have got and the overall core spending power, would that close the gap for metropolitan authorities with other types of authority? And you can see there on the right, we'd be looking at core spending power changes and looking at the cash terms changes in core spending power since 2010. And what you'll see there is that county councils still have the highest growth in core spending power in cash terms since 2010. You'll notice that all these lines sort of go up in 26, 27. And that's because core spending power, on the way we've calculated it here, is going up across the board because we're rolling in things like the baseline reset, 1.5 billion, and rolling in other grants as well that are currently outside. So it does go up across the board, but it's all about the relative share of that and then what happens afterwards. So you can see that the county councils will continue to have the highest increase in core spending power since 2010. But you can see there that black line that the metropolitan authorities would narrow the gap between unitaries and county councils quite substantially in 26-27 as a result of those funding reforms that we're putting through. So it's not fully closed, but it's largely closing that gap. It's making a big difference. But at the same time, we can see that inner London and Shire districts would continue to diverge from other classes. Those two classes of authority, for different reasons, have done much less well than the average, and much less well than other classes of authority. Shire districts in particular, they haven't had any of the increases in funding for social care, for instance, and that's made a big difference to their core spending power. And obviously the effect of the baseline reset will make a big difference as well to Shire districts. So big problems there, I think, for Shire districts. And similarly for inner London, slightly different things there. Council low band D in inner London hasn't helped core spending power increases in that class of authority. But I think the question remains, assuming that our modelling is kind of is an accurate reflection of what ministers are thinking about and what the department's thinking about, will ministers want to do more to close that funding gap for more deprived metropolitan authorities with county councils, for instance? Will they want to do more and push it further? And will they be concerned about those losing funding share? Will they be concerned about the impact on inner London and on Shire districts, and whether those authorities will be viable? And we're just showing here as well the impact on classes, the average for the class, but clearly there's a big range between each class, and ministers will be really concerned about what happens between the highest and lowest as well. What are the outliers looking like? What's the impact on those authorities? So just a list here of the things that we're going to look at in more detail. First of all, the control totals, resetting those for the latest levels of expenditure. Looking at council tax equalisation and updating the data for that within the new settlement and the level of equalisation that we could apply. New formulas for adults, for children's, we'll look at those in more detail. Then within the foundation formula, some judgments here around things like indicators and weighting of those indicators. Some of the service specific formulas where I think a lot of the focus will be. Capital financing, does that remain as a separate RNF, or does it get rolled into the foundation formula? Area cost adjustment, I'm not looking at this in any more detail here. The big issue there is going to be about whether the government wants to include remoteness within the area cost adjustment. You'll recall back in 2018, they brought in some new factors to replace density and sparsity, traversal, dispersal measures, travel time measures, and also remoteness, which is more about the distance that authorities are from markets and the effect that has on their costs. That's not been mentioned in the consultation. It wasn't mentioned in the funding reform group papers. So we're not sure whether that's going to come back in. Then public health grant, we're not looking at that in this paper. We don't know whether that will be part of the funding reforms or whether the new formula that was developed 10 years ago now will be fully implemented. And then some other issues as well we're not going to look at here, but they are important. What population estimates will the government use? Will they use the census? Will they use more recent mid-year estimates? Will they use the new admin-based population estimates, which are another way of measuring population change? Then for some of you, the island funding for the Isle of Wight, for the Isles of Scilly, important things there as well. And then we'll look at the effect of the baseline reset, but most of the charts we show here exclude the effect of the baseline reset. And then what we'll do over the next week or so is to take all these assumptions and put them through our fair funding model and create a range of different funding scenarios that we can use in our forecasting. So in terms of the control totals, our default assumption is that government will use the 2023-24 budget expenditure to reset the control totals. That's what was proposed in the 2018 consultation. You would use the latest expenditure, and we've used the methodology that was outlined alongside that consultation to look at what those new control totals would look like. And it's based broadly on total service expenditure, but we have netted off specific grants, not least because within our modelling they're funded. They're still funded separately from SFA. So what you see there is some big changes to things like the share of funding that would go to younger adults and children's services would increase quite significantly based on both the current 13-14 control totals and based on what the MXCLG's mapping exercise looked like back in 2018. Some big increase there for those two services. You'll see on the far right as well, capital financing drops from 21% of the overall control total, down to 12% based on MHCLG's mapping exercise 7 years ago, down to potentially zero. So that frees up a lot of control total potential to go into other parts of the settlement. So I think that's possibly why things like high risk maintenance, county EPCS, district EPCS, for instance, are drifting upwards, even though you might have thought that spending on those services would have reduced as a share of the total. The odd one, though, is older persons' personal services. Partly this is because some of the social care grants we've netted off here, so it reduces the level of funding for those services. But also spending on older people's social care hasn't increased as quickly as other parts of social care. It's younger adults and children that have had the really big increases. So we're oddly seeing a reduction in the share of the overall control total being allocated here to older people's social care. The other result to draw your attention to is around fire, increasing from 2.1% currently to potentially 5.2%. That's just based on budgeted expenditure and the methodology that we've seen from MHCLG, but that obviously would increase fire authorities' share of the overall control total as a result, and increase their share of the needs assessment as a result. Just to give you an indication of what would happen if we went back to using the 2018 based control totals, i.e. the last ones that MHCLG produced in their mapping exercise, what we'd see is that Met authorities in Shire counties would have quite a big increase in their overall funding as a result of going back to the old mapping exercise, an increase of maybe 120 million for Mets, 182 million for Shire County. So changing the control totals does have a big impact on the distribution of funding. It's difficult to really unpick exactly what the impact is here because there are lots of interacting factors. Difficult to unpick the reasons for movement. I think removing capital financing RNF and rolling all that into the foundation formula has a big impact, and as we'll see in a second. And that's possibly why Mets and Shire counties do less well from the current distribution of control total that we've looked at. But what's clear as well is that there's quite a big room for judgment for ministers. Council tax equalisation, I mentioned that we'd updated the data that we've used for council tax equalisation, so we're using 25-26 Band D. We're still assuming, though, that our default assumption is that only 85% of actual council tax income is equalised. And we went for that just because that's what the level of equalisation is in the 2013-14 settlement. And also because if you go up to 100% equalisation, it really is very, very highly redistributive. And we see here on the right-hand side, if we did increase the level of equalisation from 85% to 100%, that would shift a further £356 million over to metropolitan authorities, largely at the expense of Shire counties, and actually largely at the expense of a handful of Shire counties in South East England. So it really does move quite a lot of money around. And I think this shows you what SOGOMA's key ask is about equalising all of council tax income, and the degree to which that would move money around even more than we've got in our kind of default assumptions and our default scenario. And clearly does badly affect quite a few of the Shire counties, big reductions there for some. So it's a very significant lever for ministers to use. It would benefit Met authorities hugely. And if ministers do want to close that funding gap, that's kind of the main way, I think, to do that. And also, I think it would be perfectly justified in technical terms. There's no reason why only 85% of council tax income should be equalised. 100% is a perfectly rational approach to take. Then looking at the foundation formula, and you recall back in 2018, the concept of the foundation formula was that it was a very simple, flat distribution. It was population based, possibly with, or certainly with an area cost adjustment uplift, and possibly with a deprivation uplift. But clearly the government now is much keener on having something that was similar to the old, or the current EPCS formula, and it's talked about bringing back in measures for density and non-resident population, and also increasing the weighting for deprivation. So in our default scenario that we looked at in version 5.10, We had deprivation set at 10 or 7.5% for county and district foundation formula, a weighting for non-resident population of 5% and for density of 5% as well. So pretty big weightings for those key indicators, and they're all things that you might think of as being kind of urban related indicators. But back in 2018, we used much lower weightings for these factors, only 5% for deprivation and actually 0 for both density and deprivation. And what you can see here is that if you go back to using those 2018 based weightings for foundation formula, you can see that it's actually inner London boroughs that would lose the most. And the flip side to that is that it's inner London that gains mostly from bringing back in things like density and non-resident population, as you would expect. And it'd be places like the metropolitan authorities that would gain from having a higher weighting from deprivation. So there's some judgment there that ministers could use, but I think those indicators here will be more about helping out inner London and trying to mitigate the losses in lots of inner London boroughs. The other side of this is that there's no mention of bringing in or reintroducing a sparsity indicator. There's quite a big sparsity indicator within the current EPCS. They're only talking about bringing back in density. I think there is a problem here that the idea with the new area cost adjustment is that the cost of density and sparsity are compensated by having the travel time indicator within the settlement, within the area cost adjustment. But by bringing back in density as a separate indicator as well, I think that potentially double counts the funding that goes to authorities for density. They're looking at children's services relative needs formula. The formula was developed before the pandemic, but the research paper was not published until the 27th of February. There's the link to it there. It's a really sophisticated piece of work. You'll see that the peer review paper on there is very complimentary as well, but it's a child-based formula. So instead of us having what we'd normally think of as being, local authority level indicators, it seems to be building up a new formula based on aggregating up this child level data. So it seems to be that it'll be much more robust. But the problem for us in authorities is that it's much harder to model that. I think we're pretty much relying on looking at what is actually published in terms of, it's almost a black box really. What does the outcome look like? But the only way we can get an idea about what that would do is by looking at the Children's Social Care Prevention Grant that was published in the final settlement this year, and trying to work out what the RNF is that they used in that as the interim Children's Services RNF, which should indicate what the new research looks like. If you look down the bottom right there at the table, it seems to take a lot of funding away from London, this new formula. So outer London and inner London down by 30%. It seems to increase funding for metropolitan districts up by 24%, and it seems to take a bit of funding away from shire areas as well. Shire counties down by 2.1, county unitaries down by 8.1%. So it seems to move money away from London in particular, and to some degree from shire areas and towards metropolitan areas. You can see there, if we used it on the chart, if we go back to using the current children's RNF rather than the new one, then inner London would gain by 375 million, outer London would gain by 587 million. So they're really big numbers. And that decision about using the new formula will really benefit metropolitan districts. Looking at the adult relative needs formula, to be honest, I thought this one was a done deal. I thought it was almost certain. Well, I thought it was certain that the government would use the research that was done before the pandemic by the University of Kent. That was published informally back in 2019. We've had it in our modelling since 2020, so it's been there for a long time. We thought it was certain to happen, but it's still not been published formally by the Department of Health. It wasn't mentioned in the consultation paper. There are indications since then that the HSC doesn't want to use the formula in 26-27, despite it being based on very robust research and analysis. The alternative would be to update the current formula for the latest population estimates, but that would be a really suboptimal solution. The current formula is pretty dreadful, and just using that really would, I don't think it would be a very good outcome at all. But if they did move back to using the current updated adult RNF rather than using the new one, that would benefit Met authorities a lot. You can see there that going back to using the current formula would benefit Met by about 333 million and would take funding away from Shire counties up to about 291 million. So that makes a big difference to the distribution of funding within the settlement. And there's clearly a political pressure to use the current formula updated for population rather than using the new University of Kent formula. And I think one of the considerations here might be that if there are going to be increases in funding for social care in the next spending review, which is still, I think very possible, then which formula will be used? Will it be the new University of Kent formula, or would it be the existing formula updated for population? If that's where all the growth in funding is going to come, I can see why politicians are quite concerned about which formula will be used and how much that funding goes in the future to different parts of the country. There's a lot of discussion about carving out different specific formulas for different specific services from the foundation formula. The idea being that the foundation formula just kind of grouped everything together and was a simpler way of distributing funding, but there's quite a lot of pressure, partly because things have changed a lot since 2018, to have new specific formulas outside the foundation formula. But there's been no specific criteria consulted on yet about how you actually do, what's the decision-making process for having a specific formula for a different service. Is it about expenditure size and scale? Is it about growth rates? Is it about whether something needs a different distribution? I think they're all relevant, but we don't know how the government will go about making those decisions. The likely candidates for consideration are things like housing or homelessness, temporary accommodation, for instance, big growth rates in those areas. Home to school transport, again, a really big growth rate in spending on that, and also concessionary fares. I think the smaller ones, things like flood defence, coast protection, continuing EA levies, I think the case, to my mind anyway, is pretty strong. They're quite small services in terms of funding, but they're important to those authorities that get them. I think they'll continue, but I think there's more of a debate around the bigger ones: housing, homeschool transport, concessionary fares. So the default assumption in our modelling is that there would be new formulas for all these areas. We don't know what the formulas would be, but I've had a guess at what we think they might look like. Removing those formulas and distributing everything via an updated foundation formula would benefit Mets, particularly benefit at the expense of Shire counties. And I think a lot of that is about the impact of whether you have or you don't have homeschool transport as a separate service formula. So looking at that, you can see here that if you didn't, at the moment, we're assuming that there would be a homeschool transport formula within the new SFA. If you don't have that, if you turn off that formula within the settings, you can see there big increase for metropolitan authorities, 231 million, and a reduction for Shire counties, almost exactly the same in the opposite direction. Clearly, Shire counties are very keen on having a specific formula here. There's over £2 billion worth of spending, and it's growing up very quickly. But we don't entirely know what that formula might look like. I assume it would be there'd be some kind of distance measure, plus some measure of deprivation as well. But no formula has been developed or published. So for now, what we've done is we've just used expenditure levels or expenditure distribution to distribute what the funding might look like. So it could be something quite different, but that's how we think that, roughly how that might work. Of course, the alternative to having a separate homeschool transport formula is that the funding would go back through the children's RNF. So obviously, if you're metropolitan authorities doing much better from that new children's formula, so would expect to do better by not having a separate homeschool transport formula. But that's a big decision, I think. Another key formula is going to be on housing, homelessness, temporary accommodation. Again, massive growth in spending since 2018, and the consensus at that point was not to have a specific formula, but I think the consensus now is to have one. After applying grants, net spending is around 900 million. Again, we don't have a formula consulted on yet, but we've used the distribution of funding from the homelessness prevention grant to allocate this formula. The alternative would be funding it through the district foundation formula. And you can see there, by not having a housing formula, that would take money away from inner London, outer London quite significantly. So I think having a housing formula is probably much more a benefit to London than other parts of the country. Kind of as you'd expect, really, I think. Capital financing, this seems fairly likely not to be in the formula for 26-27, and highly likely, I think, that the funding for the capital financing will go into the foundation formula. The argument is that capital financing RNF funds supported borrowing, all of which is pre-2003. So the idea is that most of it should have depreciated by now, 4% MRP reducing balance. But there's actually, I think, there's still quite a significant amount outstanding. And as you can see, the impact of not having capital financing RNF would see places like the metropolitan authorities losing 65 million, Shire counties losing nearly 50 million. So it does move money around. It's not a negligible amount. It is important. So I think seeing the numbers from government about this, I think it's quite important. Personally, I would continue with the capital financing RNF, but I think it looks likely that it will get rolled into the foundation formula. Then finally, stepping away from settlement funding assessment, looking for the business rates baseline reset. This is going to be the big thing that will affect funding outside the SFA and outside the formula changes in social care grants. Big movements, and especially for Shire districts. And I think the key thing here is that the losses from baseline reset will just compound what's happening in the losses of SFA for Shire districts. Really important. Some important technical things here as well, that we should get the consultation paper on in the next week or so. Resetting the baseline in 26-27 will be much more complicated because it coincides with the 26 revaluation and with the creation of all these new multipliers for retail, hospitality and leisure properties. So the solution seems to be that they will use VOA data, post-revaluation data, as at the 1st of April 2026. So in other words, the reset's based on 26-27 forecast data rather than what we thought would be 24-25 outturn data. So it's a much harsher reset as a result. And we also think the baseline will be for gross rates rather than net rates. And you'll get Section 31 grants payable for release, but that's a kind of a complication we'll go into in the next few weeks when we get the consultation paper itself. So how realistic is our latest funding scenario? We'll see that in version 2.10 fully when we release it later this week or next. It does narrow the gap for Met, but doesn't close it. There are further options for ministers if they want to close that gap further. 100% equalisation, for instance, implement the children's RNF but not adults, and don't have separate formulas for specific services. Some clear things that ministers could do there. But the more they do on that, the further the divergence for inner London and Shire districts. That potentially becomes quite a chronic problem, really, I think, of real divergence in funding. And also, it's not just about classes, it's also about outliers, bellwethers, and the impacts on financial sustainability and an LGR rather. So our view is that our default scenario is balanced, delivers the political outcome that ministers ought to be happy with, but the political rhetoric and some aspects of the consultation suggest that ministers might want to go even further than this. So we'll update our model and we'll put in there a range of different scenarios as well, so you can see a range of different potential outcomes, and we'll include those in a refreshed version of the MTFP model next week as well. Next steps, just a final slide before I hand over to Dan. The new models will come out probably early next week with potential funding scenarios, and we've got a new service you'll see from the service plan we're sending out this week as well that you can buy into if you want us to work through various funding scenarios for you. We'll be issuing our briefing note on the spring statement or the spring forecast tomorrow afternoon, and focusing really on the potential decisions around the quantum of funding for local government over the spending review period. Then we've got all these new consultations coming out over the summer and into the autumn, which we'll keep you abreast of, culminating in the full set of funding reforms in the provisional settlement in December. We can't wait. It's going to be a busy summer, Dan.
Certainly is.
Over to you.
Thank you. Can you hear me okay?
Yeah, can you? Yeah.
Yeah, brilliant. Morning, everybody. So I'm just going to run through the CTR, council tax requirement analysis that came out last Thursday. Adrian's already mentioned council tax equalisation, so quite an important area. If you move on the slide, Adrian, please. So council tax, the far largest element of cost spending power, was at 62% at one point, but then the social care grants that pumped in by Michael Gove dropped its importance, but it's still by far the biggest element. And probably the one element that's responsible for such wide variations in core spending power over the last 15 years. But this government is, as Adrian's just said, intent on bringing equalisation back, and it's already demonstrated the difference between 85% equalisation and 100% and the amount of money it can redistribute. We move on one. So I'm going to look at a number of statistical databases, starting with CTB1. That's done in October, the year preceding budget, isn't it? It's the first look you get of tax-based growth, of new homes, of what's happening with council tax support and various other reliefs and premiums. That's what the government then uses in the final settlement data, or the provisional and final settlement data, to set council taxes. They then alter that in the following year for the previous year with the data that comes through council tax requirement. CTR, which was released last Thursday, are your council tax resolutions and your actual decisions on Bandy, whether that be the amount you put Bandy up, or decisions around things like council tax support, second homes this year for the first time, any updates to tax-based stats, and any future growth projections you might put into your council tax requirement, which weren't there back in October in CTB1. So let's go through those. Let's start with having a look at what happened between final settlement and CTR. Usually final settlement's reasonably accurate, but a number of things have happened this year, which means there's an extra 311 million in council tax in the CTR that wasn't there in the settlement, which was run by the CTB1 data. So what was a 7.1% increase, if we move on the slide, is now a 7.62% increase in cost spending power. Usually there are differences, but they're much more marked this year, and we'll go on to why if you move on to another screen, Adrian. So what I've done here on this graph is I've mapped out the difference in council tax on the CTR1 when compared with the final settlement, which is driven from mainly CTB data. So you can see there's a whole range. This is upper tier. Look at districts in a minute, where on the extreme there's an upper tier authority with 15% more council tax in their resolution this year than the government had forecast in their final settlement. So quite a significant amount, right down to the other end where some have actually lost. Now, there's some obvious reasons for that, and one that's, I don't know if it's surprising or not, but the purple lines there show those 6 authorities that were given permission to raise council tax above the 5% threshold, upper tier, that the government in the settlement figures assume 5%, so they've obviously got more. But the blue areas, I've just picked out the 10 highest second homes areas in the country, and particularly that one on the far left there, massive amounts of second homes, which means that the council tax from second homes has given them such an increase in their council tax requirement, doubling the council tax of first homes. Some authorities shown in yellow there have opted for, not many, but some have opted for less than 5% increases in council tax. Obviously, government assumes 5%, so they'll have less. And the estimated collection rate makes a difference. So if you think we're only going to collect 97% this year and last year it was 98%, then obviously your council tax requirement comes down. So that's another factor which impacts upon it. If we move on one, I think we get the district version. So again, I've got the district version, the difference between the CTR and the government's figures in the settlement. And you'll see there that, again, second homes accounting for some fairly hefty, fairly colossal increases in council tax. And then those, a number of district authorities, small number, I should say, 7 or 8 or 9, didn't increase council tax at all, 0 increase. And obviously, the council tax take will be lower than what the government anticipated, given that it was assuming that it would go for all councils go for the highest council tax increase that they could. So if we move on one, Adrian. So all these graphs are taken now from the CTR data. So just briefly, upper tier authorities are allowed to increase by 5%, 6 authorities more than the 5%. 9 out of 151 upper tier authorities chose increases that were significantly less than 5%. Districts permitted to go 3% to £5, whichever is higher. That's only now affects 20 districts, and next year it'll affect 17. 16 of those 20 went for maxed out that £5, 4 didn't. And of the other 144, 14 went for options which were much lower than 3%. So let's have a look at what that means in terms of Band D. So change in Band D at the upper tier, you can see there that pretty much now everybody goes for the 5%. I put the 9 authorities on to the right there that went for less than that. But even then, even Wandsworth's gone for something. It's gone for 2%, and most authorities have gone for 5%. And then there's the if we go on another slide, you'll see those authorities that were allowed to increase council tax by over 5%. So authorities that are struggling financially generally have persuaded the government to let them increase them by large amounts. That would previously had Slough and Croydon. They've dropped off and they've gone back to 5%. If we move on one, Adrian. So just looking at the bandies generally where they are and showing those authorities that were allowed to go beyond the 5%. What you see there, particularly in the case that I'd spoken with Trafford previously, some of those authorities, probably from Trafford to the right, they're really stranded on really low bandees. And if you think when council tax equalisation comes in, the government will assume a national council tax. That the resource equalisation equalises against tax-based changes. It doesn't equalise against bandees. So some authorities will find themselves stranded. And I wonder, therefore, if there is a case, maybe there's a bit of precedent here in what the government's allowed, is those that are stranded in low bandees might be allowed a bit more flexibility to catch up to the average, to catch up to the assumed national council tax. It might be something that such authorities that are struggling will continue to lobby for. If we move on, we'll have a look at districts. So you can see the districts, there's a small banding to the left where they went for £5, which is higher than 3%, and there's a small banding to the right, including the 9 authorities that went for no increase, or in Broadland's case seem to have decreased their council tax. But pretty much everybody else maxes out at the 3%. If we move on one, Adrian. So in terms of the Band D, this is the level of Band D now, and you've got on one extreme Ipswich, whose Band D is £420, and their 3% netted them £12 extra in 25-26, right to the other end, Breckland, that were allowed to put it at £5 because 3% would have netted them about £3.60. You can see now why districts argue, quite rightly in my view, to make the £5 £10. So even though Breckland are allowed to go beyond the 3%, they're still earning about 40% in extra council tax than are Ipswich, who are just putting 3% on. There's a massive disparity here. And again, it makes me wonder whether there's a case for those that are way below the assumed national council tax when it comes back in, are allowed a little bit more leeway to catch up on their Band D. I think we're seeing the government far more willing to allow some authorities to pile into the Band D. Not necessarily a popular decision, but one which might help 1 or 2 authorities that in effect are stranded because of previous decisions. If we move on one, I think we look at tax base next. So here's this year, much more than other years, massive differences in tax base. See on the far left there, 7.5% increase. That would usually take 5 or 6 years of standard growth to get that there. And as you've seen in a minute, it's new homes that has made the difference. But not only new homes, there's changes to things like council tax support, changing collection rates. Sorry, not only second homes, there are new homes, council tax supports, changes to collection rates. So let's just move on one. And we see, we pick out there the impact of second homes. So again, all I've done is picked out the 10 highest from the CTB, those authorities with 10 highest prevalence of second homes. And you can see most of them, it looks like, have chosen to make the premium. The one on the far right there, whose tax base has gone down, I think that's Kensington and Chelsea. Lots of second homes, but they've clearly decided they don't need the council tax premium from them because their tax base has gone down. So if they put the premium on, they must have had a colossal reduction otherwise. But you can see lots more money coming through second homes. Move on, Adrian. And this is from the CTB now, so it shows the tax base change without second homes. You can get the second homes from CTB1, but the main figures still don't include them. So you see much more modest increases. If you look up there, the one second from, there's some significant housing growth places like Newham, which is the second blue bar. Salford and Liverpool have big increases in homes, so that's one reason council tax base goes up. The one on the left is Enfield, and their housing numbers are virtually unchanged, but their council tax support has shrunk massively. Now, I'm not convinced that's less council tax support claimants. I suspect it's Enfield having to be far, far harder on make their scheme far less generous and bring some of their tax base back, and that's reflective of some of the issues that I think, particularly in out London boroughs, they're having. That means that their council tax support schemes become less generous, therefore more tax bases coming through. If we move on, Adrian. Same for districts. Again, a massive disparity in tax base changes. And if we move on one, we'll see again that the main reason for that is new homes. So if I've got the top 20 increases in tax base, a number of those, all top 10 second homes authorities are in that list, and quite a few of those are in the top 20 as well. So you can see second homes making a big difference. So if you're an area, usually touristy area, that has a lot of second homes, you're doing really well, and most districts seem to pass that premium on. There are a few in there, Preston, Tewkesbury, not massive amount of second homes, but really high growth in housing. Spelthorne's in there as well. Spelthorne raised its collection rate last year from 95% to 97% this year. So more tax base coming in through that way. So it's not just second homes. There is proper homes growth and changes in tax base and CTS to take into account. If we move on another. That again just shows the tax base from the CTB1. So much more modest increases. It's the second homes that we can see in the CTR data that really pull that up. Great Yarmouth is one of the highest increases in tax base from the CTB1. Not very big high housing growth, but again, I suspect a tougher CTS scheme, meaning that they're demanding more on council tax from CTS claimants, whereas they're giving more generous amounts in previous years. Another function, I suspect, of some of the financial difficulties that authorities are facing. Move on, another one. So this is income now. So this is the effect of Band E increases and of tax base as well. And you can see at the upper tier, pretty much it's extra. Those that are allowed more than 5% are seeing big increases, and those who have implemented the second homes premium seeing big increases as well. So that's by far the biggest influences on the extra 311 million extra council tax that we see than the government had forecast. If we move on, we've got the same information. No district authorities allowed to break referendum principles, but you can see there lots of additional second homes. If we went top 20, you'd see another 10 blue bars on the left of that analysis there. Moving on, another one. So just looking at the top 5 and bottom 5 changes to council tax in this year, council tax income. Council tax income is a function of the tax base and of Band E. You see in terms of the 5 biggest gainers, 2 of them, Newham and Bradford, were allowed to put their tax up by 9% and 10% respectively. The other 3, Westmoreland, Cornwall, Alawite, all big holiday areas, all big second home areas, have had massive boosts to council tax income because of that second homes premium. On the flip side, those that haven't done very well, usually those that have chose to not put their council tax up by the 5% they're allowed, but in that Havering have, but they've had a tax base reduction. That might be more council tax support. It might be very low sluggish housing growth that's impacted upon that. I don't think Havering's got a right lot of second homes either. So that you can see there. Kensington, Chelsea, the lowest increase, yet one of the highest prevalence of second homes, clearly choosing not to use that second homes premium, also choosing not to go for the full 5% council tax increase. If you move on more, Adrian, same for districts. So you can see there that most districts now are maxing out their allowance on Band D, but the ones who've gained the most, again, very touristy areas. South Hams and Salcombe, as I understand, Salcombe has about 60% second homes, quite posh homes as well. North Norfolk, where a lot of people from London go for the weekend and have their second homes. And those are the places as well, really, really nice areas where there's a lot of second homes, therefore lots more council tax income for those authorities. And those at the bottom 5 usually have chosen not to put their council tax up. We see Gravesham there has seen a big reduction in its tax base. Again, might be CTS, might be assumptions around council tax collection rates, or it could just be very sluggish housing growth, or a combination of them. And if we move to what I think is the last slide, so it's 311 million pounds more, quite significant amounts between the settlement and the CTR data that came out last Thursday, mainly due to council tax flexibility for those 6 authorities, but significantly also due to second homes premium, which has created a significant boost. 9% boost to tax base and 15% boost to council tax income for some areas, but stress that for some areas only. And then there is the underlying housing growth, which actually for the first time in a number of years is much greater in the north this year, as well as other decisions like council tax support collection rates, all of which influence council tax requirement figures. And I'll leave it there. Thank you very much. Happy to answer any questions.
Right, cheers, Dan. Thank you. There's a lot happening in the year, isn't there? Council tax and everything else as well. So open it up to everybody to. I see there's quite a lot of chat there as well about various things. Obviously, Nick's first point about only being some authorities in the north that Angela Rayner's focusing more money on. I think we've got questions about density and sparsity, equalisation, homeschool transport, second homes as well, and then ACA for and homeschool transport too, and then finally about the minimum council tax support rate in Enfield. Just wondering where to start. David, you made some points. 2 points I thought were really interesting. First one was about equalisation. I hadn't realised that in Wales equalisation is 100% of income, but in Scotland it's only 66%. I hadn't realised that, but they're really interesting kind of like guidelines that we could look at. David, I'm not sure if David's still on the call, but I thought really interesting. I like that. I mean, is that, I don't know what tells you about Wales and Scotland, but I think that's an interesting point. I think the interesting thing there about density and sparsity. Graham's asking about whether how density will feature in the future formula, and whether the new ONS rural urban classifications will have any impact. Graham, I don't know if you're still there, but I mean, I don't. I think the chances of them bringing sparsity back in are less than zero, and I think there's a fair chance of them having a density indicator in there and that having a reasonably high weighting.
Effectively, that is what I was expecting you to say, and certainly don't disagree with that. My second question, which was on the new urban-rural classifications, intuitively, I don't think that's going to make much of a difference. But I guess until we see the formula and the extent to which those new classifications, which are ONS geographical classifications, of course, are actually used. I think it is a question that we're not going to be able to answer until we see that main consultation late June, early or July, as you say.
Mm-hmm. Yeah, and I think it's probably worth pressing government to make sure that they actually show any change that they put through on that urban-rural classification, because I think you'll see a big shift away from rural towards towards urban, that's for sure. Yeah.
It's interesting, Adrian, with your set of graphs, splitting it down, and whether you include capital financing into the formula or housing, etc. I mean, it tends to favour Mets and disfavour counties, doesn't it? But it's interesting how many of those they'll feel they need to get the redistribution that they want. It always strikes me as well that that's a judgment whether you include them or don't include them. And for all of the accuracy of the individual indicators that go into those formulas, it's those judgments at the end of the day that will get this government to where it wants to be in terms of the redistribution, isn't it? But there are some winners and losers that get caught up in that judgment, depending on which ones they decide to add in and which ones don't decide to omit.
Yeah, that's true. I think at the end, Dan, it's a package, isn't it? It's all about what outcome do they want, and so I try to show some of those outcome measure, about closing that gap and the degree to the kind of change they need to put through to close that gap, if that indeed is what they're measuring it on. But in the end, it's a package, isn't it?
Yeah, exactly.
Yeah, I think that point that David made about equalisation, Scotland at 66%, Wales at 100. It's going to be somewhere between those two thresholds, isn't it? And I guess that's probably the thing that they can use to fine tune it really in the end.
Yeah, and we talked, because I did wonder about with the second homes, because there'll be a number of you on the call that I've done really well from second homes, or maybe just don't have them. But we talked, didn't we, Adrian, about whether the second homes effect might be equalised, but you don't think it will, do you? In terms of they'll pick up CTB1 data that sort of excludes second homes. So those that have had those 15% one-off increases will probably get to keep those.
I think that's true.
Shielded from source equalisation.
Yeah, we were talking yesterday about that CTB1 data has been what's been used for tax base within the formulas in for as long as I can remember, rather than the CTR tax base. CTR tax base really is tactically where you want to set your budget, but CTB1 is the actual raw data in theory, isn't it? And I think the problem is that if some people don't apply a second homes premium, they've not really tested about whether they genuinely are second home owners that they've got data on. Martin's making a point there about people pretending they're second homes and the authority with the lower band D tax. You may have two homes, one has a second home premium, another one doesn't. So there could be that data's soft until everyone's doing it and we know for sure whether it's right or not. I'm assuming those that I've not seen those Daily Telegraph articles. I'm not sure whether they're in the same bit, Martin, same part of the paper where they're advising how to avoid VAT on your school fees. That's probably the truth of that one. But I interesting to see who's what those numbers look like and the degree to which councils can collect that income. I don't know, Dan. That's what's in the budget. I don't know whether we'll see other figures later in the year about whether they've actually been collected or not.
Yeah, it is interesting, and it looks like to me that again, most of the districts with high second homes have chosen the premium. I think I don't know whether that Telegraph article, Martin, does suggest who has and who hasn't, because I can see Kensington and Chelsea haven't. I think you said two others haven't. And quite a few. Camden's got high prevalence second homes. Quite a few of the inner Londons seem to have, and some of those do seem to have charged it. But it's another thing that makes council tax disparate. Liverpool and Knowsley don't have many second homes, as well as a low tax base, so they'll be looking to the equalisation to really sort of make good the disparities that they've suffered from years of there being only limited equalisation in the system.
Yeah. And I guess with this government being more focused on equalisation, it's probably a bit of a higher risk. I think it's still a small risk of them equalising second homes income, Dan, but I guess there must be a little bit of one there. That is a little bit of a risk. Martin mentions
like
as well. Well done.
Go on, Adrian.
I was saying, Martin mentions about what Enfield have done. You spotted that, didn't you, in the analysis now about Enfield's tax base going up a lot, and Martin mentioning about changing the CTS scheme, and that's the reason why the tax base has gone up by a lot. I must admit, I do find it interesting about the way that local governments handled CTS, and that the cost of it, I think, is probably lower now than it was when we got responsibility for it back in 2013-14. I'd be interested to see what happens here with Enfield. That's a big increase for some people by the looks of it.
Yeah, and I suspect it's the hardest to collect, particularly if it's people who are former council tax benefit claimants who've been used to getting quite a generous level of council tax support and now are being asked to pay that much more. I mean, it'd be interesting. There's a couple of points I make on that. The government took a 10% saving when they introduced council tax support.
Yeah.
Which is differential across the country. High needs areas tend to have high levels of council tax support. But when they rolled in the council tax support grant to SFA and cut that, it feels to me like there's a bit of equalisation probably required around those with very high levels of council tax support. Saw that grant reduced significantly, but I haven't seen the support reduced, and that might be part of the reason for the fact that they're making those schemes less generous. But I don't know if you can use the emojis. Have a lot of authorities on the call made their council tax support scheme less generous, thereby increasing their tax base. Is that because I think, Martin, you've said before, it's happened quite a bit in outer London. It clearly seems to have happened at Great Yarmouth. Are there other areas where anybody else willing to sort of show of hands to say that their council tax support have made it less generous over time, or perhaps you did right at the start when you were looking for savings early doors? Not sure.
Yeah, it feels like it's the sort of thing that you'd want to. Yeah, it's something where there's for some councils there's quite a bit of potential upside there, isn't it, in terms of income, as long as you can collect it.
Yeah. Yeah, and it'll be interesting when we start to see the collection data through the collection funds and the collection statistics as to whether Enfield actually does collect most of that increase or whether it just becomes quite difficult.
Tina at North Norfolk saying they've changed payments to increase tax base.
But Tina, you've done pretty well out of second homes as well, presumably. North Norfolk has got lots of second homes, hasn't it?
We've done extremely well. It's over 500,000 just for the district, and it's about 7 million for the county. We've used 35% sort of attrition rate, and it's still over 3,000 homes, so it's about 5,000 in total.
It's interesting, Norfolk, because I think Kings Lynn as well is quite high.
Yes,
Kings Lynn and West Norfolk, and in Devon where I live, South Hams is high, but so is North Devon, so is East Devon. So the Devon County Council has got a really big. Norfolk and Devon, I think, are the two county areas where there's been a big boost because of the decisions made by their districts in high second home areas. So it's a one-off boost, isn't it, to the base? But it'll be. Oh, sorry, my phone's going.
Tina, did you do a lot of work to try and validate who was a second homeowner or not? And have you had much attrition since you build?
That work is ongoing. We sort of had an idea of who we thought, but we are doing more work now, and we're yet to see whether there'll be sort of either transfers over to business rates, as one-offs, and then they'll get tax relief, won't they? So small business rates tax relief, or whether they claim that the house is up for sale or whatever, the various loopholes that there are in the system. And then on the council tax support, we, rather than reducing the amount of payment, we sort of introduced some flat rates, sort of, or standard rates that we would pay so that it created a saving and enhanced our tax base, but didn't actually have an impact on the claimant with council tax support. Yeah, by sort of, I can't remember how we did it, but yeah, rather than calculating each claim, we're saying if you fall into this category, you'll get so and so, and yeah, made it sort of simpler.
Yeah, it is horribly complex, isn't it? I never quite used to understand our council tax support scheme, but others did, so I was happy with that. There's somebody there, but yeah, Martin said about a huge postcode lottery and CTS and second home. So yeah, which all impacts from GLA precept.
Yeah. I think London and central London boroughs in particular are interesting outliers, you know, both in terms of things like actual Band D levels, but also things that Martin points out there around levels of CTS, and the degree to which ministers look at in London boroughs and think, you know, are they overfunded in their terms? Not my point, but you know, when they look at those things, and well, you know, other people can't afford that level of Band D, other people can't afford that level of support on CTS, and use that to justify changes in the funding system, which you've seen in some of our slides earlier. But at the same time, overlaying that with that political lens of, you know, whether, you know, some of those in London boroughs are Labour controlled. You know, it's a different way of looking at things. Obviously, not all of them, but some of them are. It does change things, but the view on inner London and central London boroughs in particular is going to be a really important one, and we don't know yet quite how that will play out. I think that's true.
I think from the stuff I do on balance sheet resilience, though, they've got to be really careful, because inner London boroughs tend to have better resilience relatively. I say relatively because nobody has particularly great resilience these days, but outer London boroughs are probably, alongside Mets and some unitaries, the areas that are suffering the most at the moment, for a number of reasons. And I think if there's something that clobbers London, the government's got to be really careful that it doesn't clobber some outer London boroughs that look to be really struggling at the moment. I think there's something in Parliament this week that's discussing LG finances and resilience specifically for London, but there's a real connect there that shows that you know, some outer London boroughs have got real issues. I think you point to that, Martin, and the very fact that many of them playing the CTS would sort of back that up a little bit. So I would worry for outer London as a sector if it did really badly or didn't do very well relatively from the funding changes. You worry less for Mets because it looks like lots of the extra money will go to the north, to the Mets, etc. But that would leave outer London as an outlier, I suspect, but remains to be seen.
Yeah. Outer London, it can be very mixed. Some very like Mets, some very like Shire counties, and there could be a real mixed outcome. But you know, some of those are also London factors as well. There was a question from Sarah Surrey about public health. Are we no longer expecting public health to roll in? Do you see it being ring-fenced post-reform? I don't know whether it will roll in or not. It's not been in the scope of any consultations, and I'm pretty sure it's not been discussed at any of the reform group meetings either. So I've kind of got it in our wider modelling. I've assumed that it will be part of the funding reform package. I don't assume that it will roll into SFA, but I do assume that it will have they will use the new formula that they part implemented and apply that. But I've got that separately from the SFA. And I think the problem is that public health tends to be a little bit of a tricky one to manage and actually get it corral into the whole process. I think probably MHCLG will be happy for it to stay outside the settlement, but for it to be, I think we're keen for there to be a new formula applied. But again, we not looked at today, Met authorities lose heavily from the new public health formula as well. So that's probably one of the things counting against that new formula not being used. But I think our default settings are that we would assume that the new formula would be used because it's already been part implemented, but it is a bit out of date. That's another question, I think. But yeah, that's how we're assuming that it'll be modelled anyway. Jotting down, there's some questions about homeschool transport as well. I think that's going to be an interesting one about whether they go over homeschool transport from that separately. I think David was making some comments there about area cost adjustment being about costs, i.e. additional unit costs. The formula should be about different levels of demand. If there is a separate formula, that should be because there is different levels of demand in different parts of the country for homeschool transport. I think David's point probably would be that you should be funding different levels of unit cost for homeschool transport in ACA through the travel time uplifts, not through a new separate formula. But that's a quite a nuanced kind of argument there. Great stuff. I think we're almost there. Any other questions from people? Any other comments? I think in that case, then we'll leave it there. New formula, new model for us coming out probably early next week with a briefing note alongside that as well. A briefing note on the budget tomorrow afternoon, such as it is, and whatever's in there. But otherwise, thanks everyone for coming along and listening. Thank you.
Thanks, everyone.
Yes, Dan, thank you. And see you all soon. Thank you. Bye now. Bye-bye.
See you soon.
Thank you.
Thank you both. Thank you.